Good morning, guys. It is Wednesday, October 30th, 2024. This Bathrobe business. I got my coffee and I got the news. So a lot of strong numbers coming out today. So I got a lot of numbers to share with you guys today, starting first with private job creation. So private job creation was incredibly strong this quarter. So these are just the ADP numbers. But private job creation totaled a stunning of 233,000 in October, far more than expected, ADP says. So the expected number was 113,000. So we're talking more than double. Now, what's interesting with this, all year long, I think even going back to late last year, ADP numbers have fallen below what the true Labor Department numbers are. So, for example, if ADP numbers posted 150,000 jobs, the Labor Department would come out a couple of days later and say it was 200,000. And that trend has been essentially the same the entire time. So if ADP is reporting 233,000, I think when the Labor Department posts its jobs on Friday, we're actually going to see a massive surge. I think we're going to see anywhere from 255 to probably 300,000 just based off of the trends that we've seen. So this is a positive sign, but I think the real wave is coming on Friday, where it talks about private sector job creation from the Labor Department directly. And now that's pretty much all there is with that story. Now, another major story let's talk about is GDP growth, which kind of counteracts this one. So, in the opposite direction, GDP growth did fall a little bit below expectations. I'm actually going to share this Forbes article. I have two articles on the same subject. I think the Forbes article is a little bit cleaner. The U.S. economy grew at 2.8% annual rate during the third quarter, short of expectations. So, the expectation was 3%, and second quarter growth was. The expected growth was 3.1%. Second quarter growth was around 3%. So it did fall short of expectations. Now, still very strong growth numbers. One of the biggest tailwinds on it was actually in the CNBC article where it talked about imports, where we imported a little bit higher than anticipated at 11.2%. And that's what offset the gains of GDP here domestically. So if it wasn't for the imports, if we were producing those 11.2% domestically, we would have had a stronger number. Now, another story I want to talk about in relation, well, I guess that's all for this subject. I'm gonna leave that as it is. So job growth is incredibly strong. GDP is slightly weak. Now we'll see what the Fed does next week. I think they're meeting on what is it? I think November 7th. I think it's next Wednesday is their next Thursday is the next meeting. So we'll see what they decide. Given these numbers, I don't think it warrants a rate cut, but they're in a mode of cutting. That is after the election, though. So we'll see what that means. It's also kind of no man's land for the election because no matter who wins, you're between administrations. So it doesn't matter if Trump wins or if Harris wins. Really, no one's responsible for the economy because nobody's technically president. I mean, obviously, Biden is still president until January 6th. But really, the economic, the political pressure is off of the Fed. We can say that the Fed is independent of economic pressure, but it's untrue. So during this period, they could go, laissez-faire and do whatever they want. And the board was split last time on whether a cut was necessary and how much of a cut was necessary. So I think the November 7th is going to be the most honest, independent Fed that we've seen in the last 4 years. Next story I want to talk about is gold, my favorite subject. So this is going to be interesting for two parts. So once again, gold is hitting a record high. It is as 2796, so practically 2800. It might have already hit 2800 today. Let's check the numbers. Yes, it did. It hit 2801. Again, all-time high. All-time high, just not just nominally, but when adjusted for inflation. As I always say, the highest gold had ever hit was in the 80s, where it was around the $800 range. Adjusted for inflation, that was about $2,600 by today's standards. So we have broken all-time highs across every single metric. It's scary. It's definitely scary. Now, to help bolster this also, as we know, a lot of the rises in gold has been central banks buying up gold. This has been largely with China, Russia, but even the United States. Now, all central banks always have a gold reserve. That's not new, but it's the increases in gold reserve that are very interesting. So I'm going to share another article with you guys. Ignore that. So this article is from Reuters. Now, it's kind of burying the lead. It says China January to September gold consumption slides 11% as high price deters appetite. This actually isn't true when you delve into the numbers, and I'll show you just in just a second. But before I do that, I want to reiterate, China has been increasing their gold consumption year after year. So they're accelerating. It was at, I don't know, 1,000 tons in 2022, 2,000 tons in 2023, and we still don't have 2024 numbers. Now, this article is saying that China is slowing in gold buying, but it actually isn't. What's slowing is the gold jewelry purchase. So that has fallen 27%. But this number right here, buying for gold bars and coins, climbs 27.14%. That's the important number, because that's the investment number. When you invest in gold, you don't buy jewelry, because obviously jewelry has a massive markup and it does not reflect the price of gold. Not to mention, you're not buying pure gold. You're buying 14 karat, 18 karat, whatever karat it is. Oftentimes this is done for strength. Other times it's done to dilute the amount of gold in there. So really the price you're looking at for buying gold is the gold bars and gold coins, and that is up again year over year by 27%. So this is accelerating. The article doesn't stipulate whether this is through central banks or private purchases, but it doesn't really matter, because at the end of the day, gold investing is up through China, which was the largest gold buyer both in 2022 and 2023. So in other words, I expect this number to continue to rise, aside from the fact that they're also seeing massive inflation that nobody's talking about. But I do believe inflation is very prevalent in the market. That is actually further bolstered by, I didn't talk about this earlier, but in the CNBC article, it does talk about how a lot of the growth in the third quarter for the U.S. was heavily pushed by government federal spending. So another major factor of the department cited for growth was federal government spending, which exploded by 9.7%, pushed by a 14.9% surge in defense outlays. So when the government spends, that's an inflationary pressure, because nobody spends like the government. And let's be honest, the government doesn't spend through taxation anymore. That's not how budgets work. This is through debt borrowing. And debt borrowing is just a fancy way of saying printing money. So this gold number is going to head higher. It's going to head higher because China's investing heavily as a hedge, and because the economy, the U.S. government is spending heavily on anything and everything they can find. And it doesn't really matter who wins the election, because both Kamala and Trump are exactly the same in that regard. Trump, despite being on the right, had massive deficits. In fact, his deficit is equal to that of Biden's. No, I lie. I think it might be greater than Biden's. Now, you could make the argument for COVID, sure, but the fact still remains that he spent more than a Democrat, which isn't that uncommon for Republicans, to be honest. The other number I'm going to share with you guys is Bitcoin. So Bitcoin is going up as well, 71,870. I don't believe this is an all-time high. It actually might be. Let's actually zoom out on all-time highs. Actually, it is. It is. So Bitcoin is at an all-time high, more or less. The all-time high was 72,837, which was in September. So it's near its all-time highs once again, but let's be honest, it's probably going to break that, especially as the election approaches. And a lot of people will quell their investments to see what happens, but then afterwards, regardless of who wins, there's usually a surge. Now, there's an interesting article in regards to this and China again. So this article is a bit more speculative, but I do want to share it because I think it could also affect the price of Bitcoin. So it's saying that China is going to have a massive stimulus package post-election, depending on who wins. Now, I don't think it actually matters who wins, because let's be honest, both Trump and Harris are fairly hawkish on China. Both are trying to reshore as much as possible. The Biden administration did not reverse any of the Trump tariffs, and in fact, increased them in regards to EVs and electronics up to 100%. So Biden has doubled down on tariffs, and Harris probably will as well. And of course, as we know, Trump loves tariffs. So if that, I think post-election, there could be some sort of stimulus. Now, the only thing that I think that this argument, our article is a little too speculative. China just went through a round of stimulus, and I think it's too early to do a second round, seeing as how it takes time for the money to saturate the market. So I think this could be possible, but I don't think this would be until the next year, until 2025. But the article is talking about how if it does happen, it's going to send Bitcoin prices higher for multiple reasons. The fact that inflation is going to be higher, it's going to be a hedge, etc. But, and again, the link to this article is in the description below. But I think this article is being a little bit too aggressive with the fact that it thinks this stimulus is imminent. I think it's not going to happen for at least a couple more months, seeing as how they just went through a round of stimulus already. Granted, that stimulus did not have the effect that most people thought. But still, if it does happen, we're looking at massive increases now in the price of gold and the price of Bitcoin within the next couple of months. Last article I'm going to share is just short and sweet. Just mortgage demand stalls. Not a surprise as mortgage interest rates are higher. So mortgage interest rates increased to 6.73% from 6.52%, rising 0.69 from 0.64. Obviously, this is a disappointment because despite the fact that there were rate cuts, interest rates have gone up. This is because, as I usually say, obviously interest rate cuts affect overall interest rates. When the Fed cuts interest rates, it affects everything. However, many mortgages and car loans are set off of a 10-year treasury bond, and that has not changed. That's actually increased in yield. So because of that, interest rates are higher. This is why I'm not a supporter of rate cuts. I think we need higher interest rates because those that lend overnight, large private equity firms, hedge funds, major banks, they're the ones that really need interest rate cuts, not private consumers. Private consumers are not independent of that market, but much more disassociated from that market than major institutions. And major institutions do need to be brought down a peg because every time that Wall Street does well, Main Street does not. That's pretty much it. So those are the stories of the day. I will see you guys back here tomorrow. I hope you have a productive Wednesday.